Hello, everyone. Welcome back to another Market Open live stream. So today we've got some jobs data that came in. It's not the official jobs report yet, so keep that in mind. This is it's sort of a private company that puts this together rather than the government. So it's not technically the official stuff that we like to use, but it is something that tends to give us like a little bit of a head start, or sort of like a heads up as to what kind of jobs data we might expect over the next, basically Friday morning. Friday morning is when there we go. Friday morning is when we'll get the actual government jobs data from the Bureau of Labor Statistics. And that's when we expect jobs to also come in quite low, kind of like this ADP report came in. And that's because Jen Psaki over the White House is already basically freaking out going, crap, looks like jobs are going to come in low, which is not good. And that's mostly because of Omicron is what's being blamed right now for the jobs decrease. But let's take a quick look at the ADP report so you could actually see the report itself beyond just the headline. The big thing, obviously, is that the headline number did come in at, oops, that's not the highlighter. There we go. It came in at 301 to the negative side. And I think the easiest way to see that is looking at the chart right here. Total non-farm payroll, you see this just massive plummet here in jobs, which is really something that we haven't seen since, job losses that we haven't seen since the beginning of the pandemic. And this is just really just kind of showing like, oh, okay, well, like that's what happens during pandemics. Now, this kind of goes both ways in terms of like, well, how does the market react to this? Well, on one hand, you have the market thinking, okay, well, does this mean we have less inflationary pressures potentially? Or does this go in the opposite direction where this just makes it more difficult again for supply chains? Because obviously we expect this to be a temporary issue because of Omicron. And what's kind of crazy to see too is that the losses were really well dispersed across almost every type and sector of business. Look at this. Small businesses lost 144K, medium businesses 59K, large businesses 98K. And then over here, the only places you actually had job growth was in natural resources and mining of about 4,000, and the professional/technical services where you had a 4,000 job gain. But look at this one right here. Leisure and hospitality got smoked with 150K down here. And trade, transportation, utilities down 62K. Goods producing, manufacturing down 21K here. Anyway, some larger declines here. So this is finance actually went up too. Look at that. Finance went up about 1,600, which is kind of a drop in the bucket to everything. Anyway, they said the labor market recovery took a step back at the start of 2020 due to the effect of the Omicron variant, and its significant, though likely temporary, impact to job growth. The majority of industries experienced job loss, marking the most recent decline since December 2020, when there was a decline in December as well, when we had the last COVID wave. But anyway, we expect that obviously to be transitory. The big question here is going to be on Friday, how much of a move are we going to see in the unemployment pay, or I shouldn't say the unemployment pay. When the employment report comes out, we're going to see how much wages are going up on a month-over-month basis, and that's going to get annualized out, and then folks are going to probably trade off that data either positively or negative based on whatever ends up happening with inflation. Now, another thing that happened is we got OPEC, who a lot of folks were hoping they would release a crap ton more barrels from their supply constraints, from their limited supply. But OPEC is this group organization of petroleum exporting countries from the Middle East and elsewhere that come to an agreement in terms of how much supply to actually release to the market. Obviously, they make more money when oil is expensive, and so rather than and oil's been skyrocketing, right? And so rather than really hike the supply substantially to deal with the supply shortages and sort of the inflation that we're seeing on the side of oil, OPEC Plus came to the conclusion that they would only release an additional 400,000 barrels, which was less than expected. And if we look at what ended up happening to oil prices, we can see that Oil prices pushed up again. You can see here Brent up 1.27%, and our WTI crude over here up 1.5%. Natural gas up 11% though, and I wonder if this is a bug. Jeez, but anyway. That seems crazy. The natural gas is all of a sudden up this much. So we'll see when the market opens and this refreshes more appropriately. But anyway, the wild thing to say with oil, obviously, is that energy costs skyrocket when oil and natural gas and that go up. Which you did have a very interesting kind of inflection in Europe. In Europe, we got inflation data, and in my opinion, it was actually good news. The Eurozone inflation skyrocketed, but not that's not the good news part. Consumer prices went up 5.1%, and the expectation was 4.4%. So blew expectations out of the water. But once you took out energy, you actually had a slight tick to the downside, potentially because of a lack of Omicron-driven spending. And so this is going to make for a really, really interesting CPI report next week, because even if inflation comes in slightly low or lower than expected in America next Friday, markets are going to have to sort of weigh, well, wait a minute. Even if inflation comes in low, is it only low because of Omicron in January? And are we going to go back to higher inflation in February? Or worst case scenario, let's say inflation comes in elevated. Oops, let me pull up. I want to see what the expectations are. Let's say inflation comes in elevated on next Friday's CPI release. Like, well, if it comes in elevated during the Omicron, what's going to happen after, right? So there's going to be this really interesting kind of tug of war next week, and we'll see what happens here. Okay, so CPI expectations. Do we have it yet? Let's see here. No. Trying to get the forecast for CPI. Okay, here we go. CPI, the 10th, February 10th. I think that's actually Thursday. That's interesting. Usually they do it on Friday. Oh, well, anyway. Scheduled for the 10th. CPI month over month is expected to come in at 0.5, which is an annualized rate of about 6%. And the, okay. Oh, that's interesting. The expectations for year over year are, last month was 7% and came in at 7%, right? Expectations year over year are 7.3%. That's wild. That is wild. So we'll see what ends up happening, but that is a high expectation for America. Thank you, Keith Williams. I appreciate your very nice comment. Okay, so a lot of, by the way, it's worth noting, a lot has been made about Tom Lee, basically this guy who's always on CNBC talking up how great the market is and buy the dip on everything. And I know I've always been a big fan of buy the dip. I've obviously gotten concerned about what I believe will be a Federal Reserve overcorrection before things get better. Could always be wrong. It's just worth noting that Tom Lee, all of last year, was a bull, including 2 months ago when he's like, the Santa Claus rally will dominate Wall Street. It's this whole article about basically how we're going to the moon in December, and December was a terrible month. But the difference is it pays to be a perma bull because everybody loves a perma bull. And I'm very bullish long run, like 3-4 years out for America. I'm a little more nervous for the next couple of years, but we'll see how data comes in. So let's see here. Okay, so that was Germany. Another thing is a little bit of a transition. So we just got another survey out that we're seeing a little bit more of a transition to services rather than goods. Goods, including non-durables such as food and clothing, averaged 31% of personal consumption during the 2 years prior to the pandemic. That went up to 36% in March and April of 2021, shortly before you were able to get your vaccine. And that has been declining for 2 months now. We're down to about 34% in December, waiting for those January numbers. But anyway, seeing a little bit more of a shift to services, which makes sense. People spending more services. But in my opinion, I wonder if it's possible that people are just spending more money in general. Let's see here. Okay. So then we've got, okay, we talked OPEC. We obviously, Google is going to push the indices really well today, and we have that Google stock split coming up. I still don't have clarity on exactly what date that stock split's expected to happen on, but there's talk that maybe Google's stock split could help them actually enter the Dow, since the Dow is a price weighted index rather than a market cap rated index like the S&P 500. So it's quite a difference, but that's interesting, and it is also leading folks to wonder, hey, is this going to maybe convince Amazon to finally do a stock split? I mean, 20 to 1, it's incredible. Anyway, as of Tuesday, Google is only one of 7 companies in the S&P 500 that trades for more than $1,000, and Google's by far the biggest. So it's quite interesting. The Google's a phenomenal company, and it's one towards the end of last year that I was building up a larger position in, because I just really, I still have this belief that once supply chain issues resolve themselves, companies are going to have to advertise their ways out of inventory challenges. Now, obviously, I've made other bets, but the supply chain issues, I really think, are going to lead to, eventually, once they U-turn, we don't know when they're going to U-turn, things could get worse before they get better. And certainly, if you look at like the Starbucks earnings call, things are getting worse before they're getting better. So I'll talk about that in a moment. But once we do have stocked shelves and a lack of purchasing, I do expect advertising to really take off, unless, of course, at the same time we're in a recession. Now, PayPal, I did go through PayPal's earnings call, and I have to say, I've never seen, like, I don't know, the CEO just seemed depressed. It was kind of a rough read, but they do mention that they expect not to see supply chain or inflationary improvement until the back half of the year, they say. This is kind of what we're getting reiterated from most companies, that you're seeing this sort of the second half of 2022 is really your supply chain shift timeframe. They are starting to also see, and I thought this was quite interesting, they're starting to see a lack of spending or a weaker consumer amongst the lower income group, probably because of a lack of stimulus and the substantial amount of sort of labor call-outs that we're seeing, especially amongst lower income individuals as well. And that's not surprising, because generally in the service sector, especially like leisure hospitality, where we saw the biggest ADP decline in jobs, it's not surprising to see people spending less in that, demographic if they are taking more time off of work for whatever reason, whether that's because of COVID or not. For example, I was at the airport in Los Angeles, and so one of the people's like, one of the people there, she says, yeah, I had actually, it's weird, I talked to her like 6 months ago when they were still having all these employee shortages, and I'm like, hey, we talked 6 months ago and I was going to Vegas, have your employee shortages gotten any better? And she's like, well, they like to say they have, but no, everybody's taking off, whether they're sick or not. Everybody's taking their 2 weeks off for COVID. I guess in California, it's like you get 2 weeks off for COVID, which is kind of insane because Omicron's, not as severe. But it did seem like there were more people around. But we'll see. Omicron's kind of thrown a weird wrench in the gear. What happened last time we had these waves is you actually had inflation stall, but then the variants made supply chain issues worse for the short term, right? Eventually, and this is why I'm a long-term bull, like 3-4 years from now. Eventually, what happens is we are going to have the most efficient companies in the world in America. Even if that means we end up, whether we go through a recession or we don't go through a recession, doesn't matter. I still believe we're on this track to a frugal decade where the insane amount of spending we're seeing right now settles down. People either have less money, either again because of recession or because things just slow down and you don't have any money more to just willy-nilly spend. So things slow down, you go into sort of maybe a more frugal style decade, but you have the most efficient companies that we've ever seen before in the world, and America is going to be the place to bet on for that. in my opinion. It's just going to be a matter of what happens between now and then. And well, that's what we're looking for guidance on the daily. Now, Google and AMD, interestingly, both punted on talking about inflation and supply chain issues. Now, obviously, inflation and supply chain issues don't matter that much for Google because they actually provide cloud services to help you manage supply chain disruptions. So Google is a beneficiary of supply chain disruptions. So that's not a surprise to me that we would see some some punting on just talking about how bad things are, and instead they just focus on, hey, look, our business is growing, or we're doing great over here. And that's also pretty common, and this is something you have to be aware of when you're looking at earnings calls, is like when things are bad, like at Starbucks, of course the CEO just wants to blame it on outside issues. Oh, it's not us, it's the supply chains, right? And then when things are going good, the CEOs are like, oh no, don't even talk to us about supply chains. We're doing great because we're a great company. It's such a freaking sales pitch. But anyway, so PayPal talking about buy now, pay later, which I thought was interesting. A big emphasis by the CEO on buy now, pay later. They call it the perfect example of a type of investment we are making to give shoppers and retailers more reasons to engage with PayPal. Whatever. And what else? Starbucks was just a complete disaster with the supply shortages. They didn't really, at least from what I recall, I'll have to double check. They didn't really give us a time frame in terms of when they thought these inflation supply chain issues would get better. And AMD, I'll tell you, she refused, the CEO refused to talk about the supply chain issues. Every time she got asked about pricing power or supply chain issues, she would just say, demand is strong, and we think we're going to meet our guidance for 2022, which is well improved. I mean, I think their guidance went up like 10 or 15% from yesterday when we covered the earnings. And it was really, really incredible. Oh, here, speak of the devil. Well, let's find out if there's any mention.
In that CPU and notebooks, I have to argue that notebooks, you're beginning to take a dramatic amount of share from really big nameplate companies. Why is that occurring?
Well, look, Jim, I think it was a great 2021. So we're very pleased with the results. We grew the company over 68%, and we really grew in every business. So, leading with the data center. I mean, data center is a great market. You and I have talked about that before. But yeah, we have made great progress in gaming, with our top game console customers, as well as in PCs and notebooks. And the key for us has been really a long-term vision on building products and really working closely with our customers and great platforms. So we're very excited about the growth.
Well, I want to talk about that last point. I'm glad you mentioned it, because I know that you have historically deferred talking directly about a big competitor, Intel, but you do talk about the notion of relationships.
Ask about inflation, Jim. Come on, bro.
Wins. From reading through your conference calls, particularly this one, it's whoever has the best long-term relationship with Megatech or with any of these PC companies. Now, this wasn't always the case, Lisa. It was, well, we're taking...
All right, we'll check back in a sec to see if they actually talk about inflation. But anyway, that was one of the things about the call, is she absolutely would not talk about pricing power because they're raising prices like crazy. Let me just quickly check.
The largest consumer companies or PC companies. I think what has been really important for us is, building really a long-term, sort of traction around execution. So,
yeah. See, when the companies do well on earnings, it's all about how great their execution is. It's all about how great they are at leading the business. When they suck at earnings, it's everybody else's fault. It's Biden's fault, So this is interesting here. This comment. Vic FPV says Fed can't raise rates drastically for inflation because of our debt. Now slow growth. World central banks are piling gold. Does this indicate a currency crisis on the way? So what's actually kind of interesting is let's Google it together. So if you pull up the St. Louis Fed interest payment percentage of GDP United States. So anyway, what this is what percentage of our like what interest are we paying as a percentage of GDP? And we're actually at really low levels, to the point where we could probably raise what we pay like 2x just to be where we were in the 90s. Yeah, take a look at this. So this is where we are right now, at about 1.5% like of our GDP going towards debt service, and we used to be at like 3%. So we could literally double what we're paying and just be at 90s levels. Like, we could totally sustain more debt payments. Let's listen in if anything's changed
First
here.
priority is always invest in the business. Invest in R&D. We're working on the roadmap for the next 3 to
She's such a salesperson. I love it. Oh man.
just what you need to do to run a very strong business.
Now, I know you can't talk directly about what's going to happen when you finally get approval of Xilinx, but there was some heartening news that you signed a deal with Nokia, which tells me I've always wanted you in telco. If you can get into that side of telco, fantastic.
All right. I don't think I'm going to get anything about inflation out of her. So whatever. All right. So what do we got here? We got Google a little bit off of its euphoria here in the pre-market. Looks like we were peaking around 30.62, which is kind of crazy because yesterday after the earnings call, I'm like, there's no way this is not going over 3,000. It went over 3,000 in the pre-market here. Let's see if it could sustain the 3,000. But AMD being up about 11%, not a surprise at all. It really deserved that. I have to say, after that earnings call, when it was sitting at like 6%, I'm like, this is ridiculous. This should be a 10% plus move. And it is. Oh, interesting. Look at Owlet up about 10% right here. I want to see if there's any news on Owlet. Owlet's been one of those kind of just like, wait, it's such a great company, and been waiting for Owlet to make a move. And I specifically want to pay attention to small caps, because if we do get confirmation that we're sort of breaking above a bottom, then small caps are going to be very interesting. No, see, there's no news, so it's probably just like social media and momentum that's moving this. We'll see if that actually sustains when we open, because a lot of these don't keep it up when we open. But anyway, this is a really strong open right here, and it's really being led by Google. I mean, Google is the reason for the season here. 9% on Google is absolutely insane, and AMD at 11%. So it's no surprise that companies like Trade Desk and Nvidia are going to do very well off this. Keep in mind, Trade Desk is actually, in my opinion, at a great price. Where is it? It's at $73. My gosh, it's great. Hold on one second. Let's see.
Xilinx catch up.
Well, David, there's no question that the last 12 to 15 months in semiconductors has been all about securing supply,
Here we go.
building the right long-term relationships, and what we've been focused on is really not just the near term. I mean, obviously, we're trying to get improvements in supply each quarter, but really, how do we build the trajectory from 2022 through 2025? And so the discussions with our supply chain partners across all aspects of the supply chain are really targeted at very ambitious growth goals. We're excited about Xilinx. I think their business has done very well. You've seen it in some of their numbers, and I think there's going to be lots of synergies as we come together in all aspects of the business, including supply chain.
See, she punts every time.
Lisa, it was a remarkable job, and what I'm really looking forward to is a much more in-depth discussion of what you've done at AMD for our investing club on Friday. You're our special.
Oh, whatever, Jim. All right, so let's go over here. Take a look at this. PayPal. Oh, I can't see it because my head's in the way here. It's worth here. We'll just sort it the other way. This makes me nervous because, look, it's easy to look at AMD and Google after a really strong earnings day and go, oh my gosh, everything's great. But look at a company like PayPal, okay? They reduced their guidance 10%, and their stock is down almost 20%. That's crazy. This is a massive company. And to be down, I don't know if maybe it was just the CEO's lack of enthusiasm or something. But for a two. Sorry. I may have accidentally pressed Command W. My bad. But anyway, for a $200 billion company to basically just drop 20% like this. That's crazy. I mean, that's $40 billion gone. I mean, like that's almost 3 Robinhoods deleted from your market cap, you know? That's wild. All right. So anyway, Square is obviously falling on this as well, down about 6.4%. Affirm is down to 4.05%. I mean, it's mind blowing how the fintech is just getting destroyed over here. Somebody, by the way, I saw this this article. Somebody in Europe is creating a brokerage, and I personally, I mean, I've looked at like investing in brokerage companies or what it takes for these little VC companies who are starting brokerage companies to start them. They are extremely expensive. There's one guy in Europe who is launching a brokerage with 250 programmers and spending $5 billion. $5 billion. Holy crap. You know, it's like, wow. You know, I feel like we take like the trading and stuff for granted, but gee whiz. Anyway, you know, what I do think is really weird is look at this, folks. Hippo, Shift, Backed, all these guys are down about 2% today. So that makes me a little concerned, not like mega concerned, but we're kind of, in my opinion, waiting for is this confirmation. I mean, you do, obviously anytime I make a move, you know where to get my alerts. But what's really weird is that we're seeing these sort of like Arrival pops substantially. It's like all of a sudden everybody's interested in investing in Arrival, or like Owlet's been popping the last couple days. But Blue Apron, Hippo, and all these other ones are getting left behind, and Shift. Even SoFi, to some degree, stuck in the mud at 13, right? I mean, SoFi could be because of the other fintech moves here. But not all small caps are being treated equally here on the recovery. You know, even Robinhood, I mean, sure, it briefly went down to under $10, but I mean, it's $14 is still pretty terrible for Robinhood. Anyway, kind of interesting. Nicola's at 829. Oh, that's interesting. Anywho, and Tesla's down about a third here in pre-market. That's interesting. It was up about 1.7% at one point in the after hours, I thought. Well, don't let yourself get too confused by futures and after hours and pre-market trading, because the volumes are so low, and the problem is they've gotten even lower over the past few months because less people are actively trading, less people are actively in this market. Things to think about. Anyway, okay, so we talked about OPEC, we talked about jobs. One thing we didn't talk about yet before the bell happens here in a minute, well, two things. Number one, make sure to go to metkevin.com/FTXUS to sign up for crypto trading. Yesterday we went golfing, and both of the people I went with were wearing FTX sweaters. we almost all were FTX sponsored. But the thing that I didn't talk about is that Vladimir Putin is suggesting essentially that there might be a way to settle tensions, especially after the Ukraine talked about how if Russia invades, it would be like an all-out war in Europe. So who knows if Putin's settling down a little bit, maybe that's a good sign. But no guarantees, you know. Sometimes things get spun a little bit. So anywho, let's get the bell. We're 5 seconds away. Here we go.
But what matters for people is that I thought rigorous work here. I thought I did everything I could, and I screwed up.
All right, well, you own it. And of course, if anybody owns PayPal, they're going to be in some pain today. There may be a larger takeaway call for the consumer, which you should probably talk about.
We certainly didn't hear that.
50-50?
No.
Yeah.
We did. Or Amex.
Yeah, I'd say that's about 50-50, right? Green, red, 50-50. Okay. Now remember what happened yesterday. Yesterday, the first, I don't know, like 30 minutes of the trading day were a little bit more on the red side. And then we rallied into the close. Maybe we'll have that again. By the way, some people are suggesting that, oh, I shouldn't be happy when stocks go up because personally I'm cash or whatever. I think people forget that going into a recession is the worst economic thing that could happen. So anything we could do to prevent the trajectory of a recession is the most optimistic. And if that means we get nice recoveries in markets, that's best case scenario in my opinion. So, trades aside, because long run matters more. We know that. So I'll let sitting at about 1148 here. Ooh, wow. That is a weird sell-off here on AMD. AMD dropping about 2%. Now, it's possible that you're going to see some red here on Google and AMD because of pre-market buyers who get reamed by institutions usually when the market opens. This is why I prefer waiting for market open. But anyway, Arrival sitting out about 3% to the upside. I thought this was a little higher in pre-market. Yeah, it was definitely higher in pre-market. Ran up to $5 in pre-market. Nano Dimension, they got a ton of cash, man. It's crazy. Nvidia, okay, this is basically the same crap we saw yesterday where we start getting these pullbacks, and it didn't last. We got some red, and we had a really nice U-turn really quickly. So hopefully it ticks back up again. And it's what we saw. Let's go to yesterday just for giggles so we can see what we saw yesterday. Look at this. Yesterday, we sold straight down for about the first 36 minutes. Basically, as soon as I stopped live streaming, the market just kept going up. So I guess I'm your best contrarian indicator. Just do the opposite. Speaking of which, if you want alerts so that way you know exactly what opposite thing to do, make sure to go to metkevin.com/join and figure out exactly what you should not be doing, apparently. Obviously, I'm joking. But look at this, 21% here on PayPal. That's crazy. 21.77%. This is painful in fintech. A place that I think, and I don't know that we're there yet, but if we keep getting this, when does Square report? This is terrible. This fintech space is getting destroyed. Square earnings. Let me find out when Square earnings are. So maybe somebody else knows. Oh, Feb 24. Oh, gosh, it's still a while to go. You've got 3 weeks to go before you get potential good news out of Square. And what about a firm? Let's find out a firm earnings. It's Feb 10. Okay, good. Okay, so you got 8 days to get to a firm earnings. And it looks like you got a little bit of pain over here on Rivian. And, of course, Piton can't keep it up. SoFi is getting stuck in the mud here as well with this mess. And looks like Toast is kind of dancing along with this space here. Now, Google and AMD also still red candling. Red bagger. Trade Desk giving you a little bit of an additional discount here. So what's going on? So SPY seems stable, but what's keeping it stable? Because I'm seeing a lot of red in fintech. Tesla down now about 1%. Lucid's down about 1%. It's that convictionless market. How about QQQ? Yeah, okay, so it's tech that's rotating down again. Is it okay, here we go. Okay, a little bit of a rotation now in QQQ again. Let me see here, FTX. So here's our FTX with our trading window for BTC. We do have a little bit, this is the 1 hour candlestick. Let's go to the minute, see if we're getting that similar U-turn that QQQ is. Kind of are right now. Let's see if that could do the same thing we saw yesterday, where we just have the morning sell-off, and then we start pushing again. Based on both the QQQ and BTC, that appears to be what's happening right now. Let's see if it can hold. Again, first few minutes, you get those red candles, and then you go rotating back to the upside. Yeah, look at that. Even Arrival trying to push back up. There we go. And getting those green candlesticks again here. Wow, Owlet just halved its gains for the day from 11% to like 5.5%. Let's see here. What's at the bottom? It's basically fintech that's at the bottom here. And it unfortunately keeps dropping right now. Like the selling pressure on fintech is just disgusting. My gosh. Almost 23% on PayPal. I mean, at some point, like how cheap can PayPal get? Look at this. This is I mean, this company now is selling for May of 2020 levels. I mean, look at it. Before the pandemic, PayPal was selling for $124. Folks, it's at $135 right now. My gosh. Let's do a fundamental analysis on PayPal today. My gosh. Yeah. All right. So let's see here. All right, there we go. A little bit of green there on AMD and Google coming in now. So some of that first few minute pain there is evaporating. Take a look at that trade desk going right back to that higher level. And so is Dave & Buster's. Ooh, Dave & Buster's at 37. Does that mean Tesla's no longer down 1%? That's right. Tesla also pushing back up, sitting at 926 right now. ARC, NEO. Let's see here. Let's see. Go back to BTC and draw a trend line on the daily chart from December 27th to now. Let's take a peek. December 27th to now on the day chart. Let's try that. So, December 27th. Right here. What, the 43.7 line? That's crazy. We're at 40. Oh, no, December 27th was actually, here we go. 49-ish. Oh, what you're saying is a diagonal trend line. You're not talking about okay, I understand. Oh, I see what you're saying. I mean, you could see it. You're right. That's really interesting. And it continues this trend. It's very similar to what we're seeing at Tesla. Take a look at Tesla on the day or the hour. I think we did 4 hour yesterday. Very, very similar. Let's see if we can break that 4 hour right there. If we could just get a full candlestick through this and break, I think that's what we need at BTC as well. Both BTC and Tesla, they really need to break through these channels here, which hopefully we get very soon here. Okay, PayPal looks like maybe a little recovery now. Let's go to a minute. No, it seems like it just slowed its fall a little bit. And Affirm and Square are already recovering a bit. How about what's Matterport up to? Matterport down 2% again. My goodness. And then you've got Google over here at 9.23 and AMD rotating back up. Okay, so some of that excitement coming back here, that should lift the indices here. Just sort of that typical first few minutes sell down and right back to buy the dip. Oh yeah, look at that. S&P up now to 456, which is quite substantially off of that support line where we were dragging around for a while. I mean, look at these supports over here. We really did a good job not breaking past this, which is good. Is it possible we can go back to all-time highs? That's the question. And we've got a really nice trend reversal right now on this decline that we've been seeing. And that's the hope. See, I had drawn this for my birthday, but we didn't get this for my birthday. Things just went down around my birthday. But hopefully we get some kind of pushback. So the original trend should bring us somewhere back to 500 by maybe the end of the month if we were to just go back to sort of all-time highs. We're not that far off. I think we're honestly only about 5% off all-time highs right now. I suppose that's worth looking at while we also look at some of the other news that's going on. Let's take a peek here. Oh, yeah, that's the downside of the stop losses. Yeah. What's with the sell-offs that open triggered the stop losses on my options. Yeah, and that can be really frustrating. Sorry that happened to you. What were we going to do? I don't remember what we're going to do. We were going to go... Oh, right, finance. Finance.google.com. And let's just get the SPY year to date here. Look at that. We're only down 4.55% year to date. And if we go to all-time highs, yeah, we're down, well, basically 4.5%. That's crazy. We hit our all-time high on what, Jan 4th? Basically the second trading day of the year. First and second trading days. Wow. All right. Well, that's gonna be really interesting, especially going into the going up against the Fed. Although the Fed board members, some of them over the last weekend have been a little bit more optimistic that they don't want to like hike us to death. What's more important than the Fed hiking is what actually ends up happening with supply chains. So Eurozone inflation unexpectedly hits a record, but again, we saw an inflection point down. We talked about this earlier. We saw an inflection point down once we took out the energy costs, which was actually a good thing in my opinion. Of course, they don't put that in the headline because they just want to FUD. Stocks extend the biggest gain since 2022. Yes. Nice bounce off bottom. Bitcoin's trend line from peak keeps pressure on token. Yep. Okay. PayPal joins growing list of pandemic boom to bust stocks. That's just wild. Omicron subvariant forecast to cause South Africa infection surge. Wow. Are you serious? Look at this. Ah, crap. Let me sign into this really quick. Stupid paywalls. You know, if you're going to pay for these subscriptions, I think I've said this before. Probably have. Okay, I probably complain every time. They should at least leave you signed in. Gosh, it's so annoying. All right, let's see if I get my login. Bloomberg. There we go. All right. All right, what do we got here? Subvariant of Omicron, known as BA2, is spreading rapidly in South Africa. Oh my gosh. It appears to be more transmissible than the original Omicron. How could you get more transmissible than the original form of Omicron? The discovery of which was announced by South Africa and Botswana in November. That was the original one, right? Research also shows that getting a mild infection with either of the two strains may not give a robust enough immune response to protect against the other Omicron. No indication that the subvariant causes more severe disease. Omicron wave of infections may end up like a camel. Okay. A wave with another hump. So far, the strain has infected a significant number of people in 7 of South Africa's 9 provinces. Really? Let's see here. All right, let's see. Can we just isolate South Africa already? Oh no. Let's get South Africa in here. Okay. South Africa way down over here. Okay, let me go to new per day. Come on, man. This is what we're worried about? It looks fine. Whatever. Come on, Bloomberg. Get it together, would you? All right. All right. So what else? Let's see here. Bill Gates, carbon capture startup. SeaWorld makes $3.4 billion takeover bid. Ooh. Ford to spend up to $20 billion reorganizing for shift to electric. Cool. And it's not much over here on Bloom. Let's go look at the sticks briefly again. So SPY, how are you doing? What's going on? Why is this SPY being funny again? Carnival Cruise Line's $21. It's kind of incredible how Carnival's really been stuck in the mud over there at around 21. Yeah, a little bit more of a rotation down. Look at that. This is just like unpredictable. Maybe that person's stop losses were a good thing, because look, Trade Desk, it just went from being up like what 4% to only being up 0.5%. Google up 8.6, AMD. So we had a little bit more red enter the market here. Yeah. Oh my gosh. PayPal's down almost 25%. Folks, realize like back in the good old days, okay, the good old days were like when stocks just went up a little bit every year. like 2010 to like the end of 2018, it was just like coast. And if you made like 5 or 6% on your stocks, it was good per year. Well, PayPal just lost 25% in 24 hours. That's insane. I mean, that's like, if you put $100 in, tomorrow you have $75. That sucks. Holy crap. Look at this Matterport, $9. Why? What happened? Let me see what the suits are saying. Oh my gosh. Let's see here. What is it? Let's see here. Tech bulls have big reasons to be excited today because of Google. Sure. I am worried that the Google stuff is just going to be like this temporary bout of euphoria and speculation mostly. Speculation is probably the most dangerous right now because I think there's going to be a lot of like, oh, well, Apple and Tesla did really well with their stock split, and so did Nvidia. So Google must as well. Maybe not. We'll see. I mean, their earnings were sick. I don't actually see a reason for this. Somebody here, by the way, in the comments says SpaceX launch was delayed because a Carnival ship is in the way. Oh, that's interesting. I mean, other than the jobs data, the job data, the only thing I could imagine is that the jobs data could potentially be creating some form of fears over maybe stagflation, which would be the worst. Oh yeah, a SpaceX launch was just scrubbed by an errant cruise ships. Wow. Anyway, that's the only thing I could imagine. Okay, PayPal kind of rotating again right now, which is good to the upside. Let me see here if we're getting those greens on anything else. No, Google's being funny here as well. No, AMD is giving this up. It's giving it up. Why though? Like things were going so nicely on this recovery. And there doesn't seem to be a particular reason other than the existing fears which have been there. It could just be that same kind of temporary morning madness that we saw yesterday. Stagflation, I think, are serious concerns. I see this is the madness we had yesterday, right? We dropped until about 706. And then we really took off and then rallied into the close. That was yesterday. And we rallied into the close on Monday and on a Friday as well. So we've had a good 3 days. Friday, Monday, Tuesday were great. But yeah, so the stagflation concerns, like I think if anything, there's fear that consumers towards the end of the year stop spending as much money. And here's what happens. If people spend less money in the fourth quarter of this year for like the Christmas season as they spent in the fourth quarter of 2021, well, then you have negative GDP potentially if people spend less on gas, goods and services. And that would be terrible because if we had a negative GDP quarter combined with high inflation, people are going to freak. I hope that doesn't happen because that means there's a potential of heading towards recession, right? Because then it only takes one more negative quarter and you're in a paper recession. Anyway, that's the only thing that I could take away from today's markets because of the ADP report. But what is this doing? Let me get rid of this. There we go. But other than that, I don't see super drama. Let's look at Etsy for a second. Let's go explore some stocks here. So here's Etsy at 144. Etsy hit a bottom around 136. Worth noting, folks, if you are buying the dip right now, Etsy's very close to its bottom. So if you're like, okay, I want to keep buying the dip, but some things have already started running. Etsy's not that far off of its recent bottom at 136. And we in May of 2021, we hit 152. So, I mean, you could get better returns than somebody who invested in May of 2022 by buying right now, basically, which is kind of wild to think about. Cloudflare just fell under 100 again. This is the most bizarre market ever, I have to say. Okay, are we good yet? A little bit. Okay, good. SPY coming back again a little bit. Tesla back to that 1% to the downside. I mean, we're not seeing like huge drawdowns, which is worth noting. Like, for example, Enphase 140. It's nicely off the 113. Not bad. Redfin's really sticking to that $30. PayPal sticking to that 25 right now. Maybe is it finding a floor at 130? I don't know. The last company we were wondering if it was finding a floor at 130 was DocuSign. Oh, but then again, look, it's at 123 right now. Oh my gosh, it went down to 108 last week. Oh. Coinbase 191 hit a floor of about 162. Lemonade hit 26 at 33. Square's almost down a full 10% today. Yeah, PayPal's struggling. Upstart, keep in mind. Oh wow, look at that bounce on Upstart. One of the things to keep in mind about Upstart is it's very trader and momentum heavy, and that's how it ran to like this crazy $400 figure. Okay. All right, let me see what other headlines might be coming through. I sound like a Minecraft villager. Personally, I never got into Minecraft. I love games, but Minecraft's been a tough one. Fast money takes advantage of thin market to widen yield curve. Let's look at the yield curve, the 10-2. So 10-2 yield curve. Line chart. Okay, it's actually started going up again a little bit. Let me just look in the last 3 days, which is good. You want the curve to spread a little bit. It looks like it actually spread today. We ran from about a low last week of about 57 to 60 to about 62 now. The more the yield curve actually stays up, the more the Federal Reserve is encouraged to raise rates. They've specifically said they do not want the yield curve to flatten, which means the spread goes towards zero. And then the inflation expectations are still stable. 5-year, for example, at 2.88. And we really haven't seen a surge in that, so that's good. All right. Wow, come on, PayPal. 25.3 now. Square's coming back a little bit. So that's Gilead. Well, Affirm came back a little, right? Yeah, Affirm came back a little bit. SoFi trying. So, gosh, anything just in finance right now. Lending Club, Upstart, getting whacked. See, the tough part here on the small caps, Shift still getting whacked. Matterport's still getting hit, although Matterport's recovering a little bit intraday right now, which is good. ARK's down about 2.7. Tesla's down about 1. Weird kind of start to the day here. Although very similar to what we saw yesterday, especially if we end up rallying into the close. And then if that happens, then it just goes to show that maybe it's time to buy the dip when you get those morning moves. That's kind of an interesting thing to consider. Steve here says, where did the majority of stimulus go? Asset purchases. We know that rent/housing inflation tends to lag reality. That's true. We will start to see this have more of an impact on inflation going forward. That is true. Now, whether the overall number will end up going up or down will be very interesting. Oh, does Matterport report today? Let's see. MTT. Matterport. If they miss, and then they fall to some of the lower levels than what we've seen, there could be an interesting buying up there. They do report today. Okay, we'll definitely be covering Matterport. I love Matterport. But keep in mind, they're going through a transition from product as the primary revenue source to service as a primary revenue source. And that's a big difference. Easy to forget that. All right. Oh my gosh. How does PayPal keep going down? Like, hold on. There's got to be, like, let's look at the forward expectations here on PayPal. Let me get some numbers for you. And then I'll do that fib retracement you're talking about on the SPY. Okay, so for PayPal, if we go out to PayPal's trash, that's why, people always say that. Every time a stock goes down, people say the company's just trash. It is expected to grow at about 18% per year through 2026, potentially even more. Like, I don't think you could poop on them that badly. I mean, it's a $132 company. Its EPS right now is for 2021 is what, $16. So 132 divided by 16, that's 8 times. Is that right? Oh no, sorry, I read the wrong number. My bad. No. Yeah, that didn't make sense. That was I read the margin percent number. My bad. No. EPS was 350. Expected to maybe be $5 next year. Okay, that's better. 132 divided by 350. It's about 37 times. Okay. Yeah, I mean, that's present. You go out to, say, 2025, where you get a $9, 131 divided by 9, you're trading for about 14.5 times earnings, which is kind of what Google trades for. Yeah, but like somebody else in the comments here says, Netflix had the same issue. Netflix was interesting because they got really cheap there for a moment as well when they were like 350. I mean, they've exploded about 20% since then. But yeah, they were trading for about 30 times 2021 and also about 15 times 2025, maybe even a little less, closer to like 12 times 2025, which is right there with that Apple or with the Google and where PayPal sits now. So it's almost like you're getting that compression to that area. That would be an interesting analysis. I might do that. Maybe we'll make a video on that. But seeing if there's like this valuation compression target that these things are running down to. Maybe if you don't mind, list some ticker symbols if you don't mind of some of these larger companies that maybe you're having this valuation compression to like a 10 2025 or something like that, and then I can do some research and report back. February 2, 2022. So I'm going to call it valuation compression, which we've been talking about since the end of November. But anyway, PayPal, Netflix, Google was one of them. Adobe, yeah, and Nvidia, absolutely. Yeah, that's a good one. Adobe. And these are phenomenal companies, honestly. Amazon. I'm going to not do Upstart. Upstart would be a little bit more with the fintech bucket. Although what I might do is do a fintech bucket because it's getting ridiculous. Like an M1 Finance style pie. Not gonna buy like AMD right right now. AMD is just killing it. Coins probably kind of belongs in that bucket. Enphase is a little more expensive than those big guys. It's almost like those software companies. Roblox. Ooh. Yeah. Okay. Somebody wants to know what's valuation compression. It's basically if you value companies at, like I'll pay up to 20 times 2025 earnings for Google, then you might have a certain price. But if the market says, no, now we're only willing to pay 15 times earnings, well, then that would be a reduction of 25%, right? And then price could come down 25%, unless, of course, earnings went up, EPS went up, earnings per share went up, and then that could kind of offset some of that. Okay, a little bit of a U-turn happening right now in fintech. A little bit of U-turn. Ooh, S-Bucks, yeah. All right, thanks for those. So look at that. Square, PayPal, and SoFi hitting a little bit potentially of a floor here, getting a little bit of green coming in now. I don't know if this is going to last, but it does look like here right at the 7 o'clock hour on time, we're getting a little bit of that green rotation again. EA is moving up, has been moving up since the open. Nvidia moving up, Trade Desk 173. Robinhood 0.47, Enphase 0.36. Yeah, these have been moving up nicely. Tesla's trying to recover as well. Cloudflare 0.9. Corsair 1.63. Interesting. Etsy still okay. Yeah, it's about 3.6 to the downside. Shift Technology. This just again reiterates the small caps. It's just so risky right now. A firm sticking around that 5%. Yeah, I don't know if PayPal is going to keep it. Going to be able to stick above. There we go. Okay, 24.9. We'll see where it goes. Anyway, let's go look at the SPY. Let's see here. The SPY pumping. Yeah, trying to get back to where we were earlier. Let's go look at the SPY on the day chart here. All right. So let's throw in a Fibby. Okie dokie then. Let's go draw a little bit of a Fibby. Do I want to go wick to wick? Let me do it on the 4 hour. Yeah, it's going to give us a little bit of a better tell. If we go all the way to the, yeah, look at that. That's almost where you're playing the game. Look at that. We draw the fib down from our peak to our low, which is usually what you want to do, but then it just depends if you want to pick the wick or the candle. It kind of is like we're bouncing off of the 457 line here, almost like we bounced off 450 for a little bit, almost kind of like we bounced off 443 for a bit. And then, of course, we were bobbing over here in the 430s, which we spent a lot of time in. That's not a bad retracement here. And we've had a nice retrace already. I mean, we're 60% back to all-time highs here from these lows on the SPY. Not bad. Big question, though, is are we going to keep potentially this rally going for the rest of the day? And so we'll see. Certainly being propped up by Google. I mean, no doubt about that. We'll see how long the enthusiasm can last on Google. AMD here doing quite well. And PayPal is trying to recover. Yeah. Matterport earnings today will be interesting. Anyway, okay. Well, hopefully PayPal comes off of this crazy madness here. I'm going to do a little bit of research on this valuation compression talk that we had. Yeah, but otherwise, I don't think we had crazy bad news today, other than that ADP report giving some fears to potential stagflation. Anyway, all right, folks. Thank you so much for being here. We'll see you in the next one.